Alrighty guys, what is going up? Welcome back to the Best Investing Money Management channel on YouTube. In today's video, we are going to be looking at the absolute best stocks to buy right now. Now, there's been a lot of volatility with the market lately. We've had just a ton of sell-off in the general market. If we look at the S&P 500, ticker symbol SPY, you can see that this ETF was trading for about, $479. And in the past 2 days, we've had crazy amount of sell-off and selling off about 8%. Now, for those of you that really are nervous about this crash or recession, hey, crashes is pretty much when the general stock market falls more than 20%. A correction is when it falls 10%. I think right now we're kind of in a mode of just looking for a possible correction, which happens honestly every other year. We didn't have one last year. We had, one the year before. So we're kind of due for one. So I honestly think this is going to bring a lot of opportunity to buy in on a ton of blue chip stocks at a massive discount. So as long as you guys understand that and you don't get shaken out of a lot of trades, I think you guys can make a ton of money off them. So the very first one that I would recommend buying is just the general SPY, the S&P 500 ETF. This is like buying the stock on an 8% discount. For me, this is an absolute no-brainer. For pretty much what I'm doing is I'm just dollar cost averaging this one. Anytime it sells off more than 6%, I'm buying and doubling what I normally will put in. So once the stock recovers, you make a lot of money. And you can see we've had some sell-off. I think we'll probably get a little sell-off back to about 424, maybe even 415, right in that zone, before we see some consolidation and some pressure back up. You can see these dips happen. You just have to use them to your advantage. So SPY would definitely be the go-to for a lot of stocks. Now, the next one here is ticker symbol VUG. This is Vanguard's growth ETF. So SPY and VUG are very, very similar, but these ones here are looking at more of the growth stocks. So you'll have companies like Microsoft, Google, Amazon, all these fantastic companies that carry a lot of potential, a little more volatility. As you can see, we had a lot more sell-off. This one sold off at about 14% compared to SPY sold off about 8%. So yes, it's like buying it on a discount, but this one's going to be a little more volatile, but still carry a lot more long-term potential just because of the picks in it. Now, this next one here is ticker symbol VIG, and this is Vanguard's dividend appreciation ETF. So this one here has a lot of dividend stocks. Dividend stocks historically perform a lot better than non-dividend stocks. The reason why I say that is because people are more likely to hold stocks that are paying them dividends than not dividends. So you can see this one sold off about 7%, which the S&P 500 sold off right at about 8-9%. VUG sold off about 10% or 14%. So this one here is a lot more conservative. Doesn't get as much growth, but you get dividends from it. So now that we kind of have some good ETFs, let's look at some picks. So the first one is TSLA. Obviously, Tesla. If you're not buying Tesla on these dips, you're missing out on a lot of opportunity. Tesla carries so much potential, a little more volatility, as you can see, but you can see it's used this moving average line, this 20 moving average line as support in the past. So I do think we'll hit it and get some sort of consolidation, maybe a little buying pressure, and possibly have a push back up to these highs here. Tesla is growth stock, so yeah, it's more volatile, but carries a lot of potential. We already talked about SPY. Buy it if you don't have it, but moving on to the next one is SOFI. This one here, this is SOFI Technologies. This is a fintech company. They have a fantastic money management product. I personally use them. I think it's a fantastic company. It's right on a support. It's sold off quite a bit from the highs. A lot of analysts from JP Morgan, from Morgan Stanley are giving this a price target at $24. So even if it hits, let's just say $22, we're still looking at a return of about 34%. Not to mention, this is like buying this stock a couple years ago, so it's an absolute no-brainer investment. This is one that I am definitely buying more of. My average cost for this is $11 a share. So given that, buying more would only move my average to about $12. So once this thing recovers, you're making a lot of money here. This one here is definitely one to keep on watch. I wouldn't recommend going heavily into something like this. This is DWAC. This is Digital World Acquisition. You can see with this huge amount of buying pressure, this is pretty much, the Trump Truth stock, I guess is the best way to put it. Trump's creating a social media platform called Truth. I think it's going to get announced this year sometime. You can see from the news, we've had some crazy returns, up over 100% in value. This one's going to be a little more volatile. Definitely what I'm doing with this, dollar cost averaging, just investing $10 a week, $20 a week, whatever you can afford. This one here, I wouldn't go crazy. I would keep it at about 1%, 2% of your portfolio. So if you have like $100 invested, put it like $1 into something like this just because of the higher risk, higher reward. So it's not like you're putting hundreds of thousands of dollars into this. If you lose it all, you only lose 1%. If this thing goes to the moon, that 1% will carry over and make you a lot of money. So the next one here is AMZN. We've had a crazy amount of sell-off, as you can see. From here in general, we just had a 15% drop in this stock. Looking at the 3-year chart, you can see this major dip. Buying this stock like a couple years ago. Amazon is one of these stocks that hasn't been doing the greatest lately. We still have a nice upward trend in 2021. We just had a lot of consolidation, very slim to no growth. It has a ton of support near this 2,900 mark. As you can see, it's hit it several times, used it as support. The absolute biggest amount of buying pressure is at about this 2,700 mark. We're almost to it. That's where I'm going to be loading up on some shares of Amazon. It fell 6% today. I think we'll have a little momentum continue before we get some buying pressure step in. The last and final one here is AMD. AMD is a company that makes computer parts, and given we have a whole bunch of news about the metaverse has to exist because of computers, and AMD is going to make a ton of money off the growth of it this year. Not to mention with the overall hype of crypto and NFTs. People need computers. AMD makes computers and computer parts, so it's just going to all carry over into the stock and make it a lot of money. Given that we've had a lot of sell-off from it, it's like buying it on a 23% discount. When this thing recovers, it's going to be an absolute no-brainer. We still have a beautiful upward trend. Company makes a lot of money, and it's just a fun, easy stock to pick. This one and Nvidia are pretty much my two favorites. But yeah, I would recommend, all of these stocks, guys. They carry a lot of potential, and just some of the top picks that I would recommend at this point in the market. So I hope you guys enjoyed the episode. If you did, hit that like button, subscribe, and we will see you later. Remember to stay happy, stay positive, and stay safe. Take care, everyone.